Okay, thank you so much, and thank everyone for coming in this afternoon. I want to move through the webinar as quickly as I can because I have a lot of material to present, and I also want to make sure that I get time to answer any questions if there are. So quickly, let me move through the mandatory disclaimer. That all signals and trading opportunities provided both oral, written or electronically that are disclosed to visitors or subscribers are for educational and demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors or subscribers within the futures, Forex, or stock markets, nor for any profits or losses that may be incurred. We all know that trading carries a substantial risk and that trading is not for everybody. Careful consideration of your financial position should be made prior to trading. Never risk more than 2% of your account on any trade. Right Line Trading is not a registered financial. We are not registered financial advisors. We are not licensed commodity trading advisors. So with that said, let me move forward. And just quickly, I'm a graduate of the University of Pennsylvania, former professor at Jefferson College in Philadelphia. I've published close to 15 peer-reviewed articles in first-tier journals. And what Right Line Trading is the product of over a decade of analysis of price action, market structure, and indicator algorithms. And the software is based on the mathematical modeling of closed systems using multivariable equations. And it's really that's really a big word for saying what we do is we look to determine what forces are present in the market that come to bear on price to determine where it's going to move out into the future. I mean, what we're looking to determine is not where price has been, but with a high probability of certainty where price is going to go. That's how our software was developed. And we're one of the fastest growing trading systems on NinjaTrader. Now, I'm going to show you our Uni Renko trading system. And I truly believe that it's going to be unlike any trading system that you have seen in the past. Now I know I'm moving a little bit quickly, but there really is a lot of material and I don't want to run out of time. You're going to see that it's going to give you precision exact software generated entries that work. And we have many funded top step traders in our live trading room. We have 175 traders who join me every morning to trade. Gonna skip. Now, the system works on futures, Forex, and stocks. All the indicators I'm going to show you have forward-looking ability. And I'm going to show you the rationale for why they have forward-looking ability. They all lead price. They don't lag price. Because the whole purpose of the software is to predict where price is going to go. Now, I just want to add that this is instrument independent and time independent. You can use it to day trade. You can use it to swing trade. You can use it for very long-term predictions or trades. And it doesn't matter what financial instrument you're looking at. You can look at a future, a Forex, or stock. The thing that is present is that the forces that come to bear on these financial instruments are universal. So it doesn't make any difference what market you trade, what stock you trade, what Forex pair you trade, or what future you trade. It's got the same forces determining how price is going to move. Now, when you decide to trade, one of the things you have to decide is how are you going to display price? There are lots of ways of doing that. You can use tick bars, you can use time bars. It's just, for a long time, my favorite way of doing that were range bars. And the reason is that the only thing that determines when a new candle is formed is simply how far the market moves. If you have a 10 range, every 10 ticks or every 10 pips or every 10 cents, you're going to get a new candle. It's not dependent upon a second independent variable, time or tick. So although a lot of people trade time and tick very successfully, it was simply my preference to trade range charts because of the single independent variable determining when a new candle is formed, and that is just how far the market has moved in price. But then the way that the market has changed in the last couple of years, we moved to Uni Renko. And now Uni Renko is a really unique type of candle. It's very, very modifiable. I'm not going to really go that much into the metrics of Uni Renko, but just like range, the only thing that determines when a new candle is formed is how far the market moves. And unlike Renko, which I believe is really a mistake to trade, Uni Renko candles form wicks. You can see it really does very clearly delineate the direction of a trend. And it really filters out the chop and the noise in the market and allows you to filter in on the direction of price. Now, if you use Uni Renko bars, they have some weaknesses. One is that they obliterate price action. Now, if you're a price action reader, and I really like to look at Japanese candlestick patterns, you're going to lose some of the power of that. Who's in control of the market, the bulls or the bears, on a candle-to-candle basis? Because it's more difficult to look at Japanese candlestick patterns. An engulfing candle, a dark cloud cover, a piercing candle, a shooting star. These formations you're not going to get with Uni Renko candles. It's more difficult to look at a rising and falling triangle or channels. Although channels you can see fairly well, actually. And if you're going to trade Uni Renko candles, you need powerful leading indicators to signal an entry. Now, the strength is that they filter out an enormous amount of unimportant noise that oftentimes tends to keep you out of a trade or fool you into taking a trade that's not going to work. So if you can combine Uni Renko with powerful leading indicators that signal an entry, they really do create superior trading opportunities. And it doesn't matter what you trade, Forex, stocks, or futures. Now, with Uni Renko, each type of instrument you trade has optimized inputs, which we have for you. If you're going to trade Google, you're not going to trade it with the same input on a Uni Renko as say, a $20 stock like Advanced Micro Devices. So along with the optimized entries, I think Uni Renko provides you with the best entry, with best trading entries. Now, I just want to add one thing, and that is 400 years ago, when the Japanese rice traders created Japanese candlestick patterns, they made an assumption, and the assumption was that the power of each buyer was equivalent to the power of each seller, and that is no longer true anymore. Institutional volume now makes up a greater and greater percentage of total volume on every market. In the futures and Forex markets, it's really quite large. And because institutional money skews patterns like this, Japanese candlestick patterns have become a lot less predictive of where the market is going to go. So we're losing something that has less and less value as we move forward. Now, if you believed in Elliott wave, which I personally don't, or Gann theory, which I personally don't, even those theories have lost more and more of their power because institutional money comes in and simply skews the market. and obliterates these type of patterns. I'm going to skip these slides. Now, the core of the system, the most important indicator, is our 3-line indicator. And what it does is a multi-time frame assessment of 3 forces that are associated with determining how price is going to move out into the future. The first is momentum, the second is stochastic, and the third is order flow. So what I want to do is to break these down individually and show you how we calculate them. Because how they're calculated is one of the reasons why they're so powerful. Now, the first is order flow. And it's really important, I think, nowadays to harness market delta, order flow, and the volume ladder in a way that makes it extremely accurate. Because what you're really doing in a fairly eloquent way is an assessment of volume. And volume, obviously, is an important metric to go with when you trade. Now, every candle is associated with a market delta. Now, this market delta, you have to, I apologize, it's a little blurry, is positive 29.85, which means on the dome, there's an overabundance of buyers versus sellers. And all this does is add up the number of buyers versus the number of sellers at every tick level, every pip level, or every cent level for the candle that you're trading and give you a number. Now, the problem with the absolute value of market delta is this. Sometimes you get a positive market delta on a down candle. And that's what throws off a lot of traders and why displaying this data in certain ways really does not have any forward-looking power. And here's a chart that I'm going to show you. And these are sequential market deltas coming off of these candles. And in general, a positive delta is associated with an up candle. And in general, a negative market delta is associated with a down candle. But when there's no absolute association, a curve like this, which is what you see almost every time, which is simply the absolute magnitude of the market delta, doesn't in any way predict the direction of price. So after doing an analysis of this, what we found is that 1 standard deviation's worth of market delta data work. The candle is going to close in the direction of the delta. And it's only the outliers that close in the opposite direction. So the question is, how do you harness that single standard deviation's worth of data and throw out all the outliers to make this number predictive of how price is going to move out into the future? And the way to do it is this. What we've done is we've only taken this is how we utilize the 1 standard deviation's worth of data. We don't look at the delta of your trading chart. We look at the delta of your 2 higher time frames. Now, if you're trading a time chart and you're trading a 5-minute, the indicator is going to look at the 15-minute and the 45-minute. If you're trading a 2-minute, it's going to look at the 6-minute and the 18-minute. And each of those time frames are going to create a market delta. So we look at the delta of the 2 higher, of each candle on the 2 higher multiple charts. If you're trading Uni Renko, it's going to be the 2 higher multiple Uni Renko charts. If you trade a 2 Uni Renko, we're going to look at the 4 and the 6 Uni Renko. Again, if you trade time, that's a 5-minute, we're going to look at the 15 and the 45. If you're trading a tick chart, say a 377, we're going to look at the next higher fib number, the 610 tick. And I can't remember what the next fib number is after that, but the next higher fib. So we're always going to be looking at the higher time frames, and we're going to look at the delta value of each of the candles formed on those two higher time frames. And the way to filter out the outliers is to put those delta values into a 15-period simple moving average. So the 15-period SMA smooths out the data and throws out the slight skewing that occurs with that outlying data. So when both 15-period simple moving averages on both two higher time frame charts are sloping up, the bulls are firmly in control of the market. And on that 3-line indicator, you're going to get a green line. When both 15-period SMAs are sloping down, the bears are in control, and you're going to get a red line. And when the 15-period SMAs are not in agreement, the line's going to be yellow. And this is an extremely powerful way of assessing the market delta, of doing a market delta analysis, and really tells you whether there's buying pressure or selling pressure present in the market at any given moment. Now, here's some examples. Now, I'm going to show you this on a live chart, but this analysis leads price. And you can see right here how the moving averages on the two higher time frames, and it doesn't matter what this chart is, or what instrument you're looking at, but are telling you that there's buying pressure in the market based on those two higher time frame moving averages. Now, price is going to come down, and as soon as it turns up, that there's an absolute direction to trade. You must trade long, or you're going to get caught in a trade, in a counter trend trade against the direction of order flow. And if you trade against order flow, you're going to wind up having a high probability stop out. The same thing here. It's very difficult to call a top or a bottom, but if you're going to do it, you only want to do it when order flow analysis on those two market delta moving averages has reversed. And here's another example. Order flow has changed. There's buying pressure in the market. When it falls, you're going to be in the up direction. Now, all of these traders trying to counter trend trade the market are almost certainly going to get stopped out. They're calling the top, and there's significant buying pressure in the market. And this actually helps our trade, because as price moves up, these traders are going to get stopped out, and they're going to have to buy their contracts or their stock or their Forex lots back, and they're going to help price get pushed to the upside. So when you run over these traders caught in the counter trend direction, it gives the direction that you want to trade a lot more energy. There's another example. Order flow green, got to trade long. No direction. You have to stand aside, and defining chop is extremely important. Down and then up. Now, when the color keeps changing, that's going to give you a good idea when there's chop in the market. Now, obviously, with one line, it's harder to define chop. You don't know if this green is going to continue on or just change color. But you're going to see as we add lines and we add forces, it's going to ultimately become a lot easier. When it turns green and stays, up you go. Now, the second force that determines how price is going to move out into the future is momentum. And there's lots of ways of looking at momentum or assessing momentum. You can assess momentum using an oscillator. You can look at Heikin-Ashi momentum. There are a lot of momentum assessments, and we used Heikin-Ashi for a while. But the best way to assess momentum, in our opinion, is the slope of the MACD. It's a MACD assessment. Now, all we do, this is not a complicated assessment. although it's a little more complicated because of the MACD crossover, which is assessed by the indicator. But at the core of the system is simply we look at whether the MACD line is accelerating away from the signal line or towards the signal line. When it's accelerating away, momentum is positive. When it's accelerating towards the signal line, momentum is negative. Now, what gives it its forward-looking ability is that we don't look at the trading chart. I mean, our thesis is that any indicator assessment, excuse me, done off your trading chart has no forward-looking ability. What we do is we look at the two higher time frames because they lead price on your trading chart, and the forces generated by those two higher time frames that we can assess are going to tell us the direction that price is going to go on our trading chart. So again, we take the same type of assessment. We look at the MACD lines. I'm sorry, it's not momentum lines, but MACD lines on the two higher multiple time frame charts. Now, it's a two higher multiple and a three higher multiple Uni Renko, but it's going to be those higher time frames or higher tick numbers or higher range numbers if you trade another type of chart. It does not matter what kind of chart you trade. And again, the time frame that you trade is irrelevant. So when both, and this should be MACD, when both MACD lines are accelerating away from the signal line on the higher time frames, momentum is green, and there's going to be significant buying pressure on our trading chart. When both MACD lines are accelerating towards the signal line, we're going to get significant selling pressure, and the line's going to be red. And when both momentum lines are not in agreement, we get a yellow line. So now we're going to combine them. And now we need dual red or dual green to take a trade. So now we've sacrificed sensitivity for specificity. This is going to occur less often, but when it does occur, the probability of getting a winning trade is now increased. So we just wait for dual red, like right here, and price drops. Dual green, which is going to occur before price turns, is going to push price up. And you cannot get caught in the counter trend direction. Here now it becomes easier to define chop. Unless you have red, red or green, green, you can't trade. These are equal forces in power. And unless they're both aligned in the same direction, the market's going to chop. And chop, and this is essentially exactly what chop is. When the forces that move price are not aligned. One is telling price to move up, the other is telling it to move down, and what happens? Price just chops. When these forces come into alignment, you're going to get a move down and a move up. Here you have dual red down, dual green up. And it also keeps you in the trade. And really what this is a proxy for is institutional money. When you have significant buying pressure is manifested by order flow, looking at the market delta moving averages, and you have momentum on your 2 higher time frames at the same time, it's usually only because institutional money has moved into the instrument you're trading and you're following in its footprint. And since you can't directly assess, there's no institutional money indicator, all we can do is look and see when they've created a powerful, they're creating a powerful move, and we can see that by looking at order flow and momentum. And we stay in the trade as long as both lines are green. And when they don't align, we're just going to get tons of chop. When they do align, you have to trade in the direction of momentum and order flow. Now, the third force is stochastic. And And the stochastic assessment is also a little more elegant than what I'm going to show you, but this is really what we're looking at. We're simply looking at whether the stochastic line is above the signal line or below the signal line. When it's above, we're going long. When it's below, we're going short. Now, the 3-line also makes an assessment of stochastic divergence. And I'm going to show you that on a live chart. Now, we almost always ignore divergent signals. And I give a 1-hour lecture on why divergent signals fail so often. So I'm not going to really go into it now. We assess it. I've wanted to remove it, but the traders in our trading room for some reason want to keep it. I'm going to show you how it manifests itself on the charts. Again, on the stochastic indicator, we look at the 2 higher multiple time frames. We never do an assessment off your trading chart. Again, it has no forward-looking ability. When the stochastic line is above 80 or less than 20, way overbought or way oversold, we don't look to fade it with divergence. We believe that the bulls are firmly in control here, or the bears are firmly in control here. When both stochastic lines are overbought, greater than 80, our stochastic line is green. When both stochastic lines are less than 20, our stochastic line is red. Between 20 and 80, we look at the association of the stochastic line and the signal line. When the stochastic line is above the signal line, the line is green. When the stochastic line is below the signal line, the line is red. And when they're not in agreement, they're yellow. Now we have 3 lines. We have momentum, we have stochastic, and we have order flow, which all must align in a given direction in order to determine the future direction of price on our trading chart. Now, this can be a little bit complicated because you can get a down signal on a yellow momentum assessment because price hasn't crossed the MACD line yet, although the signal line or the MACD line is heading towards the signal line. So to make it a lot easier for us to trade, what we've done is this. So this is just a recap of what I've said. It can become difficult when you're looking at 3 forces: momentum, stochastic, and order flow. So we project the results of the assessment directly onto your candles, which make the assessment really easy. And you don't even have to look at the 3-line. If you look at the candle halo, I've elected to make my halo blue. You can make it any color you want, any thickness that you want. And when the candle halo is blue, you're going to go long. That means the 3-line indicator, looking at order flow, stochastic, and momentum, is aligned to the upside. When the candle halo here is gold, that's when you're going to go short because it's aligned to the downside. Now, if you get a black candle in the middle of an up move, that's probably stochastic divergence. Now, here's another example. You can see you have the down 3-line on an up candle. And what happens is as soon as the price rolls over, you're going to trade short. Now, you're going to get this up move, but you're going to wait for the candles to align to the downside, and then you head down. Here's an up move on a down 3-line, which is almost absolutely going to fail, and price rolls to the downside. Now, the workspace should be as clean as possible. So there should be no data projected that distracts your eyes. And since we don't look at the 3-line anymore, I eliminate it. And what I do is I simply make it transparent. So the only thing that I see on the chart is the assessment of the 3-line. Now, I haven't put in any market structure yet. We don't have a 50 or a 15, but when the candle halo is blue, we have an entry. Order flow, stochastic, and momentum on a multi-time frame basis are aligned long. On these two down candles, we're not going to take them because the overall trend is up. And we're just going to take the up signal and head up. Now, if we want to take a counter trend trade, we wait for those forces to roll over, and this is where you would take your counter trend trade. Now, here's another example. Here's a short entry aligned to the downside. Now, you do have an entry here, but this is, again, a counter trend entry, which I'll show you when we define the workspace better. Now, on this short trade, you have no entry because there's no 3 line. The candle halo is black. On this up entry, no entry. The candle halo is black. And here's your short entry down. So your 2 low risk, high reward trades are here and here. And it doesn't matter whether it's stocks, Forex. Now, to help give us software generated entries, we use an exponential oscillator. Now, price on a Uni Renko chart moves in an exponential way. And an exponential oscillator really gives us much better entries than a standard oscillator. So here's a chart and what we look at. We go long above the 50 and short below the 50. So we've defined market structure here. So when we get an oscillator generated signal and the candles outlined in blue, we're long. When we get an oscillator entry and the candles outlined, blue, long, blue, long. Now the best trades come right off the 50. As you move off the 50, the chance of getting a really long trade diminish. And we never take a counter trend trade. We never go short above the 50 or long below the 50. Now here's another example. Oscillator entry short with the 3 line, short with the 3 line, short with 3 line, short and short. And we never take the counter trend trade. Now here's how the signals are generated. When the oscillator line crosses this magenta line to the upside, you get an up signal. When it crosses it to the downside, you get a down signal. Again, to the upside, along, to the downside, we get a short. Now, if we add the 50 in and apply our rule, we're going to get 2 perfect short trades here, here and here. Now, let me show you the charts. I want to show you a live chart because you can kind of see anything on a JPEG, but I'm going to show you a live chart. Now, this is a live chart of crude. And I'm going to move a little bit because there are 2 additional indicators, and hopefully I'm going to have time to show them that we're putting into this special, which are going to help you trade a lot. Just going to add some days here to trade. Now, I think all right, I'm getting an error message here. All right, well, that's good enough. But right here is a long entry above the 50, and up you go. Now, if you look here, now let me just explain. This candle is haloed in blue, which tells you that order flow, stochastic, and momentum are aligned to the upside. This candle is haloed in magenta. That's the colors I've elected to use. And it tells you that order flow, stochastic, and momentum are aligned to the downside. So look what happens if you try to take a long trade. It blows up on you and price collapses. So it censored this long trade. And so it not only tells you this is a great trade to go long, it also protects you from taking a long trade against the direction of these three forces. Now here's another trade right here, long. Now, we never trade into a pivot. And I don't want to run out of time, but let me show you a couple of other good trades. So these trades are both into a pivot. We can't take them. We need to take what's called a free and clear trade. Now, here's a free and clear trade. Here and down. Here and down. Here and down. Here we have no trade. We have no three line. The trade is out. Here, this is not a bad trade. It's a first target. Here we have no trade. There's a trade and a winner. See, with no trade here, this is a winner, but we can't trade it. So it's going to filter out some winners. And look at this trade. So you're rarely going to get pushed into a bad trade, and it's going to censor out a lot of losers. Now you see this trade up, no three line, you can't take it. It's a loser. Now it also costs you this winner, but our goal as day traders is to get winners and avoid losers. Now, we're going to give you the pivot indicator, and I don't have time to really go into a lot of detail about it, except that it's a pivot indicator that's very, very unique, and it works off a pivot's created off a candle body, not off a wick, and a pivot is broken when 2/3 of a candle body closes above or below it. We have one of the few accurate pivot indicators. We don't trade into pivots. We're also going to give you this background color, which shows you the direction, the multi-time frame direction of the instrument you're trading. If you take an entry with a green background or a blue up, it's a much more powerful entry. If you take it a long, see this long entry right here? Now you have a little problem with the pivots, but you have a huge move. And the multi-time frame alignment of price to the downside right here. Now, it does not look again at price on your trading chart. This is assessing the direction of price on the 2 higher multiple time frames. So we're throwing in a lot of additional ways for you to assess risk on a system generated entry. Now, if you adhere to all the rules, stay away from pivots, trade when you have a multi-time frame alignment in price, which is pink or green, and trade only when you have a candle outlined in blue to the upside or magenta to the downside, and you can determine the color and thickness of the outline. I put magenta and royal blue. You can determine whatever price that is that you want. About 80% of your trades are going to work. The key is to stay away from a pivot and to trade short on pink. See, this is a good place to go long, and you're getting multiple short signals. Let me just refresh the chart. Refresh the chart a second. I'm getting a problem here. And look at this long trade right here. Well, I'm trying to give you a feel for how accurate the system is off of a live chart, not just do this off of JPEGs, which you can be shown anything. Now this is crude. This could be a stock. This could be a Forex market. They all look the same and they all trade the same. This could be a 2 Uni Renko. This could be a 2 hour. This could be a 5 minute. It's irrelevant. If you're above the 50 and above the 15 and you get a long signal and your background is also showing you up, the probability of getting a winner is exceedingly high. Now let me show you our offer, and then I'll see if I'll answer any questions. I know it's a lot of material to digest in a short period of time. But it's a little bit of a complex system. But one of the nice things about it is you're going to be in the room with me for a month. And the trade methodology, how you trade it, we have 175 people in our live trading room. We make money almost every day. I'm not going to tell you every day because that'd make me perfect. But we make good money every day, and we trade futures. And in the morning, we have another trading room that trades Forex. Now the system's normally $1,999. We're going to give it to you for $699. That's a lifetime license. You get free upgrades for life. If we make it better, we give you the upgrade at no cost. And let me tell you, we upgraded what oftentimes make an upgrade. You get 1 month in the trading room with me. You get a 10 module training videos, which are really going to teach you how to trade this. We support it real strong educationally. And you get a video tutorial library, which has 450 videos in it. You get the bias indicator, which is that background color, and you get our pivot indicator. Now we even do more. What we do is we're going to set your ATM for you based on the volatility of your instrument. If you want to trade Google and you want to take it out in lots, when do you take out your first lot? If you want to take it out in 3 lots, when do you take out your second lot? When do you take out your third lot? Where do you place your stop? Well, we're going to give you all those metrics based upon the volatility of your instrument. We have them calculated. So we're going to give you the best place to put your stop and the best place to take your shares out if you want to take it out in pieces, which I strongly recommend. I mean, if you're more conservative, you're going to take it out in 2 lots. If you're a little more I'm sorry, if you're very conservative, if you're willing to take more risk, you take it out in 2 lots. And the special offer, which includes all of that, is www.rightlinetrading.com/special offer. Now let me see if there are any questions. I only have a minute for questions. Now it expires on Monday night, and our number is 786-713-5276. I mean, Rory, an associate of mine, is there on the phone. If you want to call him and ask him any questions, he knows the system extremely well. And without it, we could not trade profitably. It's really the core piece of our trading methodology, is the multi-time frame analysis of those forces that move price. And order flow, stochastic, and momentum are what determine where price is going to move out into the future. Let me quickly look at questions. I don't have many. I'm not going to be able to answer very many, but let me just go up here. Okay, here we are. Okay, Matthew. Which market, in your opinion, so far, does it work the best on? You know what, Matthew? I really like it best. I mean, I like it on crude oil for futures. We also, it trades great, the E-mini. It's excellent on the Dow. The more volatile the market, the tougher. I mean, we still trade the NASDAQ in the live room, and the NASDAQ is a brutal instrument to trade. But it also does really well on the Qs. It does terrific on the SPY, on the SPYs. So if you're a person who wants to trade stocks, and let's say you want to trade an option on a stock, and you're looking for a 75 cent or dollar move on the Qs, or you're looking for a dollar move on the SPY, this is a great system for scalping that dollar and leveraging it by buying the option. Forex, Tony, although volume on the Forex is different, you're completely correct, there's still a dome and there's still market depth on the Forex. There has to be an absolute value of buyers on the dome and sellers on the dome. And that's how the market delta value is calculated. And you still get that on the Forex markets. And this works extremely well on the Forex pairs. The 3-line is the actual indicator, Al. It's the line. It's the indicator that shows the order flow and stochastic and momentum. That's our 3-line indicator. Works with all futures. It works with all stocks and all Forex. They're all moved. But if the system that you get is not instrument independent and time independent, then there's something wrong with it. I mean, mathematically, if the forces that govern the movement of price, put it this way, the forces that govern the movement of price are universal. They're not manifested to one market or one instrument or one time frame. So unless you have a system that is time frame independent and instrument independent, there's some flaw in the system. So it does not matter what you trade. You know what, Brad? I do, Brad. Brad asked me that. I look for the trades that have the least risk, that have the highest specificity. Another way of saying that is the highest specificity and the least sensitivity. And those trades come with the green background bias, away from a pivot, close to the 50, because that's where the moves are really going to go far. Those are the trades I like to take. Tight to the 50, no pivot in sight. I call those free and clear trades with background green, telling me that I have a multi-time frame alignment in price of the instrument I'm trading in the multi-time frame direction of order flow, stochastic, and momentum. That's the best trade entry you can get. It doesn't matter what the time frame is, and it doesn't matter what you're trading. Carrie, you can use it to trade options because it's gonna predict with a tremendous amount of precision the direction of a stock. And the two I like the best are the Qs and the SPY. But you can trade any stock you want at all. You're just gonna have to move in, buy an at the money or in the money option and be ready to move out fairly quickly. Unless you take a longer term time frame, because you can use the system to swing trade. This works on NinjaTrader 7 or NinjaTrader 8. If you're on Thinkorswim data feed will power this on NinjaTrader. So you download a demo of Ninja, hook it up to Thinkorswim for no charge. We'll do that, and we do this for you. It powers this, and you have to take the trades on Thinkorswim, but the entry signals are going to come right off of Ninja. We have a lot of Thinkorswim traders because the Thinkorswim API that connects the two are excellent. I'm only going to go one more minute because I don't want to be disrespectful. We'll talk to you. Les, just send us an email and Rory will call you. You get everything you saw there, OM. Everything. If I showed it to you, you get it as part of the system. I made sure the chart I put up only showed you what you got, but you got everything that you saw. There was a 50 and a 15, Fran. Those are very special lines. That's not a 50 EMA. That's a 50 EMA of a 50 EMA. That was a 15 EMA of a 15 EMA. Those are optimized lines. They move as fast as a regular EMA, but they have the stability of an SMA. You're going to get that with the package. And it creates great structure for you. long above the 50, short below the 50. And I'm going to teach you all the nuances of the system. You're going to be in the room with me and see how I trade. I mean, there's a little bit more to it. It doesn't make it more complicated. It just makes it more successful that I just can't go into in this. Hey, thank you, Alan. On this system, Brian, we use the exponential. We're not getting rid of that. It works the same way on the NQ, Ernest. Exactly the same way. And we trade the NQ in the room. Again, with Thinkorswim, Erasmo, you can hook up your TOS data feed, power it off a NinjaTrader 7 or 8, and you're going to have to take the signals off a Ninja. You can download a demo of Ninja, hook it up to your Thinkorswim data feed, and you are good to go. So you can run the system for no money. After Alto, it's $129 a month, but trust me, we have 175 people in the room, and I have traders in that room for years. So it's up to you if you want to continue in the room. You may become a better trader than me and not need the room, but you get the room for a month. Again, this is Thinkorswim. I answered that, Pete. It is compatible with NT8. Thank you so much, OM. Hey, okay, guys, thank you so much. And thank you for giving me this extra time. I really, really, really appreciate it. So listen, everyone, have a great, great afternoon. I hope you found this educational at the very least. And you've learned a little bit about what I consider to be the best way to trade. So have a wonderful weekend, and I hope to see you in the trading room with me. I'm in there every day at 5 minutes to 9, and we're looking at crude oil, and we're looking at the NASDAQ. Take care. Have a great afternoon. Bye-bye, everybody.